Hello everyone, welcome back to Global Online channel. So if you are preparing for the upcoming December attempt of NTA UGC NET examination, especially from commerce and management background, this session is very important for you because in this session we will be discussing 100 plus short MCQs from commerce and management, all the combined units. Okay, so this will be beneficial for you to maximize your score in the examination, right? So please watch this video till the end and share as maximum as you can. But before starting the session, very important thing I would like to share with you all. If you are seriously preparing for the upcoming NT UGC NET examination, which is December attempt 2025, we have come up with the paper 2 complete course for management and commerce people. In this course, you will be guided by the experts to increase your score in the examination and qualify this examination. In this course, you will get complete video lectures, which will cover your all the units. Complete syllabus notes will be provided. Mock test will be provided to you, so you will practice more and more and your confidence will be building up, right? PYQs with explanation, doubt clearing sessions, marathons, these all things, all materials will be provided to you. Okay, so if you want to join this course, just contact on this number. You can do WhatsApp message or WhatsApp call and join this course. Okay, or else you can also go to the Play Store, download the application, that is Global Online. Okay, search Global Online on the Play Store. You will see this logo on that application. Download that application and you can join the course. Okay, so this is your first question. Debt equity ratio of 2:1 means what? Okay, so we have already covered the debt equity ratio in the previous session. What is debt equity ratio, how it is calculated, what is the formula of this, right? So 2:1 means what? A, shareholders funds are twice the debt. B, debt is twice the shareholders fund. C, debt and equity are equal. Or D, none of the above. So the right answer is option B, debt is twice the shareholders fund. Okay, if the debt equity ratio is coming 2:1, that means it is the debt is twice the shareholders fund, right? So how we calculate it? The formula for debt equity ratio is to debt divided by equity. Correct? Debt divided by equity. Correct? So the debt equity ratio is financial metric that shows the proportion of the company's financing that comes from the borrowed fund, that is debt, versus shareholders fund. Clear? So what is debt? Debt, that means the long-term borrowing such as loans, debentures or bonds, and equity, that means the shareholders fund. Okay, we issued the shares, we have the fund from the shareholders. Correct? That is your equity, which includes share capital and reserves also. Correct? So how we calculate debt equity ratio? See, these 4 points will clear your all the doubts. See, the ratio of 2:1, right? That means that every 1 rupees of equity, correct, the company has 2 rupees of debt. If the ratio is coming 2:1, that means your 2 rupees is debt and 1 rupees is equity. That means you have 1 rupees of equity. Every 1 rupees of equity, the company has 2 rupees of debt. Getting it? If you have 1 rupees equity, getting it? If you have 1 rupees equity, right? That means you have 2 rupees of debt. Getting it? That means if you have 2 rupees of equity, you will have 4 rupees of debt. Getting it? The higher the debt equity ratio, for example 3:1, if it is 3:1, that means it indicates the greater dependence on borrowed funds. Getting it? That means company is borrowing more fund and equity is less than that. Getting it? That will be give the company, or it will push the company into the risk. Getting it? If the lower debt equity ratio, for example it is 0.5 to 1, that means company is relying more on the own funds. Okay, that means the company is going under low financial risk, right? Thus the debt equity ratio helps in understanding the company's capital structure and its balance between the ownership fund and borrowed fund. Correct? Clear? Now moving to the next question. Which of the following is measure of short-term liquidity? Current ratio, debt equity ratio, net profit ratio, or return on asset? Okay, I'll give you 10 seconds to answer this question in the comment box. You have to give a answer in a comment box. A, B, C, D, whatever it is.
Okay, so right answer is option A, that is current ratio, right? Current ratio is correct answer. What is the formula of current ratio? Current assets divided by current liability. Clear? Current assets divided by current liability. This is the formula, and it is very important to understand the formula, by heart your formula, because in the examination it won't give you the formula in the paper. You have to by heart. याद करना पड़ेगा आपको. The current ratio is financial metric used to measure company's ability to meet its short-term obligations, right? Those due within a year. Short-term obligations, that means which is within a 1 year, right? Which is called short-term. Using its short-term assets. See, what is current asset? It includes items like a cash, account receivable, inventory, or other assets that are expected to be converted into the cash within a year. Okay, the short-term period. If any asset which is convertible into the cash, that is called current asset. And what is current liability? That means the obligations. Okay, the payable things for short term, that means within a 1 year, if there are some liabilities, there are some payable things, that is called current liabilities. For example, like account payable is there, short term loans are there, debts are there, which will be settled within a year, that is called current liabilities. If it is more than 1 year, it won't be called as a current liability. Okay, so the formula for that is current ratio is equal to current asset divided by current liability. Clear? If current assets are 2,50,000 and current liabilities are 1,25,000, what will be the current ratio? So I have given you the formula. You have to answer it in a comment box. Fatapat. Current assets are 2,50,000 and current liabilities are 1,25,000. It's really very easy question. Right answer will be 2:1. So what is so hard in that? Okay, we had the formula, current assets divided by current liability. So what is current asset? 2,50,000 divided by 1,25,000. Clear? Cut the zeros, right? 250 divided by 125. Obviously 250, that means 2 and 1. 2:1, which is 250. It is a half of 125. Clear? So 1:2 will be the correct answer. Clear? Next, which of the following is measure of overall profitability? Gross profit ratio, net profit ratio, return on investment, or current ratio? Give answer. All right. So right answer is option C, return on investment. Clear? See, the higher ROI, return on investment, that means it indicates that company is effectively utilizing its capital to earn more profit. Getting it? If the return on investment is higher in the company, that means the company is using their assets to generate more profit, right? If the lower ROI, that means company is not efficiently using those assets to generate the profit. Clear? The efficient use of resources, or poor profitability we call it. Inefficient, sorry, not efficient, inefficient use of resources. Clear? For example, if EBIT, okay, that means earning before interest and taxes, 50,000, and capital employed 2 lakh. Okay, then what will be the return on investment? 50,000 divided by 2 lakh into 100, that will be 25%. That means company earns 25% return on the capital it has employed. Correct? So that is how we calculate the return on investment. Sales are 10 lakh, gross profit 2,50,000. Find gross profit ratio. What will be the gross profit ratio? 15%, 25%, 29%, or 30%? What will be the gross profit ratio? We have discussed what is gross profit ratio, right? How we calculate it. We have already discussed in the previous sessions. So the right answer is 25%. See, How we calculate gross profit ratio? Gross profit divided by sales into 100. Okay, so we have gross profit 2,50,000 and net sales 10 lakh rupees. Correct. So net sales. So gross profit is 2,50,000 divided by sales, that is 10 lakh rupees, into 100. So what will be the answer? 25%. If the gross profit ratio is 25%, that means business earns 25 rupees as gross profit on every 100 rupees. Getting it? On every 100 rupees, right? The company is earning profit 25 rupees. Gross profit. Getting it? On a 100 rupees sale, basically. If the sale is 100 rupees, the company is getting 25 rupees gross profit. If the higher gross profit ratio, that means better efficiency in production and sales, effective pricing, or lower cost of goods sold. Clear? That can be possible. Lower GP ratio, that means may indicate high cost of production, inefficient management, or low selling price. Okay, this will be the possibilities. If the higher GP ratio, that means the higher gross profit. Getting it? That means company is efficiently working, producing the goods, and selling price is also good. Getting it? If the lower GP ratio, that means company is not efficiently using the what we can say, the products or the sales functioning, right? Or the sales. If the sales are not good, that means your GP ratio is not good. Clear? Next, net profit after tax is 1,20,000. Equity capital is 6 lakh. Find ROE. Okay, 20%, 18%, 15%, or 25%. What will be the answer? So right answer is 20%. See, ROE is equal to net profit divided by shareholders equity. Okay, so basically ROE what? Return on equity. Clear? So if the net profit is 1,20,000 and shareholders equity is 6 lakh into 100, that will be 20% of your ROE. If the ROE is 20%, that means that every 100 rupees invested by shareholders, the company generates 20 rupees of profit. Clear? Higher the ROE, that means better utilization of equity capital and strong profitability. And if the lower ROE, that means it suggests the inefficient use of shareholders fund. Company is not sufficiently using the shareholders fund and it is not generating profit from the this kind of fund. That means shareholders fund. Clear? Next question. Earning per share EPS is calculated as, okay, earning before interest and tax divided by number of shares, net profit after tax divided by number of shares, net profit before tax divided by equity capital, or gross profit divided by number of shares. Okay, give your answer. Only 10 seconds will be given to you. Okay. All right. So right answer is option A, earning before interest and tax divided by number of shares. Operating ratio of the company is 75%. Sales are 20 lakh rupees. Find operating cost. Okay. So before that, we need to know what is the operating cost and what is the formula to calculate the operating cost, right? So first thing we'll have the right answer. Then I'll explain you how we can calculate. So 15 lakh is the answer. So first we need to understand, we need to know what is the formula for calculating the operating ratio, right? In which the operating cost is there. See, operating ratio is equal to operating cost divided by sales into 100. Okay, what we have operating ratio, we have sales. Okay, we don't have operating cost that we need to calculate into 100. If we do, we'll have the operating cost rupees 15 lakh. Clear? Operating cost is not given. When we calculate, we cross calculate it, we'll have the right answer. So please remember this formula, operating ratio, which is operating cost divided by sale into 100. You will have operating ratio. Okay. Next question is, if earning before interest and tax is rupees 4 lakh, Total capital employed is equal to 10 lakh. And then what is ROC? That means return on capital employed. Okay, 30%, 35%, 40%, or 45%. So right answer will be 40%. Okay, so before uh, heading towards the answer, we need to understand, we need to know what is the formula of ROC. That means return on capital employed, right? So earning before interest and tax divided by capital employed into 100 जब हम करेंगे, then we'll have the 40% of ROCE. Okay, 4 lakh rupees earning before interest and tax, 10 lakh rupees capital employed was given, then into 100 when we do, we'll have the 40% of ROCE. Okay, remember the all formulas that I'm giving to you, because only these formulas will help you out in the examination to increase your score, right? Sometimes it is asked to calculate, sometimes it is asked the missing figure in that. Okay, next, which of the following ratios shows the relationship between the net profit and net sales? Net profit ratio, return on equity, return on assets, or operating ratio? Very easy answer. You all have to give the right answer in the comment box. For that, only 10 seconds will be given to you. So the right answer is option A, that is net profit ratio. Okay, how we know that there is a relationship between net profit and net sales, right? In which ratio? So that is net profit ratio. Net profit divided by net sales into 100. That will be net profit ratio. Remember this formula. Okay, very important. Net sales is equal to 12 lakh. Net profit is equal to 2 lakh 40,000. Find the net profit ratio. Just we have discussed the net profit ratio, right? So calculate it and let me know what will be the correct answer. 20%, 18%, 15, or 25. So right answer will be 20%. Okay, so net profit ratio is equal to net profit divided by sales into 100. So we have net profit 2 lakh 40,000, we have sales 12 lakh rupees. When we calculate, or we divide it, sorry, we multiply it with 100, we'll have the 20% of net profit ratio. Next, return on assets indicates. See, these kind of questions can be asked in the examination, right? So if you want to know the theory part of these ratios, financial ratios, see, it is not necessary that it should be only calculative or it is numerical part. Sometimes they ask the theory part also, right? So in the previous session, I have discussed both the part, the numerical, the calculative part, and also the theory part. If you have not watched that video, please go and watch. I have given the link in the description box. Okay, so return on assets indicates profitability of sales, profitability of shareholders fund, liquidity of assets, or efficiency of assets utilization. So return on assets, we calculate it to know the efficiency of asset utilization. When company has the assets, okay, how company efficiently using those assets to generate the profit, right? That we need to understand whether these assets are useful or not, right? So return on asset is equal to net profit divided by total assets into 100. Then we'll have ROA. Remember this formula. Earnings per share, EPS, is calculated as. Now they are asking about the formula. Formula of EPS. Net profit after tax divided by number of equity shares. Net profit before tax divided by share capital. Earning before the interest and tax divided by number of shares, or dividend divided by number of shares. Okay, so right answer is option A, that is net profit after tax divided by number of equity shares. Okay, next, a company has net profit after tax 8 lakh rupees and 2 lakh rupees equity shares. Find EPS. Okay, rupees 2, rupees 4, rupees 6, or rupees 5. Calculate it and give me the answer. Right answer will be rupees 4. See the formula. EPS is equal to PAT. PAT means profit after tax divided by number of shares. So we have net profit after tax rupees 8 lakh and number of shares are 2 lakh. Okay. So when we calculate it, we'll have the rupees 4. Clear? So that means rupees 4 will be the profit for every share, number of share. Clear? Number of share. So for example, if we have one share of rupees 100 rupees, for every 100 rupees the company is generating rupees 4 profit. Clear? That is the reason why we calculate the EPS, earning per share. Next, market price per share is equal to rupees 120, EPS is equal to rupees 10. Find price earning, that means PE ratio. Okay, 10, 12, 15 or 20. So right answer will be option B, that is 12. So PE ratio का formula है market price divided by EPS. Okay, so we have market price of rupees 120 and EPS is rupees 10. Okay, when we calculate this as a in a formula, we'll have rupees 12 as a PE ratio. Okay. Next question. If dividend per share is equal to rupees 6 and EPS is equal to rupees 10, then dividend payout ratio will be what? 40%, 45%, 50% or 60%. What will be the correct answer? The correct answer will be option C, rupees 50, sorry, 50%. Okay. Dividend payout ratio, DPS divided by EPS. Okay, dividend payout ratio is equal to earning per ratio into 100. Okay, so we have DPS 6, we have EPS 12 into 100. When we do, we'll have the 50% of DPR. Next, if DPS is rupees 5 and market price per share is rupees 100, then dividend yield ratio will be what? Okay, 4%, 5%, 6% or 8%. It will be 5%. Okay, so dividend yield is equal to DPS divided by market per share into 100. So we have DPS 5, market price 100 into 100. When we do, we'll have the 5% of dividend yield. Okay, which of the following is not a capital budgeting techniques? So there are different kind of capital budgeting techniques. So in the options, there is a one option which is not included in the capital budgeting technique. Okay, so which of it? Payback period, NPV, IRR or debt equity ratio. Okay, so it is straight and clear that option D is the correct answer, because debt equity ratio is not the technique for capital budgeting. Okay, debt equity ratio is there in the financial ratios that we have discussed, how to solve the debt equity ratio. Okay, so this is not the thing. See, debt equity ratio is the capital structure or leverage ratio, not capital budgeting technique. Correct. So capital budgeting tools evaluate investment viability like NPV, IRR, payback, PI. These are the techniques to solve the capital budgeting techniques. Oh, sorry, capital budgeting questions. Clear? So these all we will be discussing. Clear? Next is, this question is on the payback period. This is the one of the technique of capital budgeting, right? So question is, the payback method primarily ignores which factor? Initial investment, cash inflows, time value of money or liquidity. So what is it? It is time value of money. See, payback method is the only considers how quickly the investment is recovered, right? So payback method will give you the idea the how much time it will take to pay the remaining things, right? So it will give you the clear idea how quickly the investment is recovered. Okay, it ignores the timing value of money and cash flows beyond the payback point. Clear? Next, which of the following uses the discount rate that makes NPV is equal to 0? Accounting rate of return, payback period, internal rate of return or profitability index. Okay, so it is internal rate of return, which we called IRR in short term. Correct. See, IRR is the discount rate where total PV inflows is equal to total PV outflows, right? That is why NPV will be is equal to 0. Next question. So this kind of questions that we are discussing, like this question is asking about the PI formula. Okay, so it will be giving you the formula also, and on that kind of thing they can ask different questions, right? They may give you a partially formula and a remaining part will be the blank, right? So they can ask which of the following is the correct option, which is fulfilling the correct formula. Correct? Getting it what I'm trying to say? So option A, PV of cash inflows divided by PV of cash outflows. B, cash inflows divided by cash outflows. C, NPV divided by cash outflows. And D, cash inflows minus cash outflows. So right answer is option A, that is PV of cash inflows divided by cash outflows. Okay. This is the formula, PV inflows divided by PV outflows. If PI is greater than 1, it is accept project. Okay, it is accepted. Next question, if the initial investment is rupees 1 lakh and the PV of cash inflows is 1,40,000, the PI will be what? Okay, so just we have discussed the formula of PI. What is it? PI, sorry, PV inflows divided by PV outflows. Okay, so investment is 1 lakh and the PV of cash inflows is 1,40,000. So investment, that means outflow, right? Our cash flow is getting out, getting it? That is why we have invested. So 1 lakh and 1,40,000. So inflows, right, divided by outflows, right? What will be the answer? Here also 1.40. Answer should be 1.40. Option B. Right? Option B will be the correct answer. Here you can see. So PV inflows divided by PV outflows, 1,40,000 divided by 1 lakh. Option will right answer will be 1.40. Which technique is considered superior as it considers both time value of money and cash flow after payback? Okay. A, payback period. B, NPV. C, ARR. And D, payback reciprocal. So option B, NPV will be the correct. NPV is theoretically the best method as it considers both the time value and all cash flows. Okay. If IRR is greater than the cost of capital, then the project is rejected, accepted, kept in abeyance, or indifference. So just we have discussed, right? It is accepted. IRR is greater than cost of capital, then it will be accepted. This project will be accepted. Okay, when IRR is greater than cost of capital, the project generates more than required return. Okay, that will be accepted. Which of the following is not discounted technique, non-discounted technique? Payback period, NPV, IRR, or PI? It is payback period. It is a non-discounted technique. Okay, payback and ARR are non-discounted methods. They don't consider time value of money. Which of the following is also known as average rate of return, which is ARR? IRR, ARR, that means accounting rate of return, NPV, and payback reciprocal. So it is accounting rate of return. Which of the following is also known as average rate of return? It is accounting rate of return. Okay, ARR, average annual accounting profit divided by average investment. So we will have ARR. Okay, if the NPV, in the NPV technique, a project is accepted if NPV is greater than 0, sorry, is less than 0, NPV is equal to 0, NPV is greater than or equal to 0, or NPV is less than or equal to 0. So right answer is option C. NPV is greater than or is equal to 0. Okay, NPV, net, sorry, present value of inflows minus present value of outflows. Okay, if NPV is greater than or is equal to 0, the project adds wealth and is acceptable. Okay, remember these formulas and how it is calculated and what will be the result of it. Okay, which of the following techniques is also called the discounted cash flow DCF technique? Payback period, net present value, accounting rate of return, or payback reciprocal. So the right answer is option B, net present value. It is also called the DCF, that is discounted cash flow technique. Okay, see, DCF technique, discounted future cash flows at cost of capital. Remember this. Okay, DCF techniques discount future cash flows at the cost of capital, and NPV is the most popular DCF technique. Getting it? So basically NPV is included in the DCF techniques. Okay, it is a part of that, and payback and ARR are not discounted techniques, which is not considered in the DCF techniques basically. So NPV is the kind of a DCF techniques, that is why it is considered as a DCF. Understanding? Next, this is the calculative question. An investment requires 40,000 rupees. It generates cash inflows of 10,000, 12,000, 14,000, and 15,000 respectively. Correct. In the 4 years. Find the payback period. Okay. In the previous session, we have discussed the formula of payback period. Okay. How to calculate these kind of questions. Now I'll explain you how to solve these questions. Okay. First, the right answer is option is 3 years. Option B, 3 years. Now, first thing, remember how much we need, how much we require. 40,000, correct? 40,000 we require. That means the investment we require, right? Investment, that means it is the outflow. Getting it? And in the question, they have given the inflow, correct? 4-year inflow, and we need 40,000 only for investment. Now, first year, okay, the inflow was 10,000. Cumulative, if we consider, it will be 10,000 only because this is the first one. Then second year it is 12,000. So we can add in the 10,000. It will become the cumulative 22,000. Then third year, okay, inflow was added 14,000. So we will add it in a 22,000. It will become 36,000, right? And then in the fourth year, 15,000 inflow was there, and cumulatively it is 51,000. Correct. But in the third year, it is 36,000 only. It is 36,000 only. That means what, how much we need extra? We need 4,000 extra. Correct. Here I have calculated recover fully in 3 years. It should be recovered in a 3 years, right? So 36,000 was inflow and we needed 40,000 for the investment, right? So 4,000 we needed extra. So the 40,000 minus 36,000, we need 4,000 extra, right? But in the fourth year, 15,000 inflow was added, right? So it is covered 4,000. 4,000 was covered in the fourth year, correct? So 4,000, okay, divided by 15,000, we have 0.27 year. What is it? 0.27 year, correct? So total payback is 3 plus 0.27, that means 3.27 years. Okay, payback period will be 3.27 years. So basically we consider it 3 years. Okay, so right answer was 3 years. Next question. The reinvestment assumption in IRR method is that intermediate cash inflows are reinvested at cost of capital, IRR, risk-free rate, or market rate. It is the IRR. Okay. NPV assumes reinvestment at a cost of capital, whereas IRR assumes reinvestment at IRR itself. Okay, remember this point. Next, a project cost 50,000 and generates annual cash inflows of 15,000. Okay, project cost is 50,000 and annually the inflow from that project is 15,000. Okay, for 5 years. The discount rate is 10%. Okay, and use PV factor of 10% for 5 years, 3.791. Find the NPV. Okay, so NPV will be 6,865. How? So PV of inflow 15,000 per year we have. Okay, 3.791 it is totally calculated and they have given in the question itself. So right answer will be PV of inflow will be 56,865, right? So NPV, now we need to calculate NPV. So NPV is equal to 56,865, that is your PV of inflow, minus 50,000. What is it? Project cost, correct? So what will be the answer? 6,865, right? So as per this, decision will be, it will be accepted since NPV is greater than the 0. Okay, NPV is greater than the project cost, right? So it will be accepted. Next, which of the following methods gives multiple results when cash flows are unconventional, like sign changes? Okay, NPV, IRR, ARR, or payback? Right answer is IRR. If cash flows alternate between positive and negative more than once, IRR can give multiple solutions while NPV gives unique value. Okay. Project requires 1,20,000, PV of inflow 1,50,000. Find the profitability index, right? So right answer will be 1.25. How it is? PI is equal to PV inflows divided by PV outflows, correct? So 1,50,000 we have inflow and 1,20,000 we have outflow. So right answer will be 1.25. It is as simple as. Okay. Which method is appropriate for ranking mutually exclusive projects? Payback, ARR, IRR, NPV. Right answer is NPV. Mutually exclusive, one only project can be chosen. NPV is the best as a measures absolute wealth addition. So that is why the right answer was that. A project requires 2 lakh, expected annual accounting profit 40,000, average investment 1 lakh. Find ARR. Okay, so 20% will be the answer. How? ARR formula we need to understand first. What is formula of that ARR? Average annual profit divided by average investment into 100. Okay, 40,000 given, 2 lakh is given into 100, 20% will be the right answer. Okay, it is really very easy, but only when you remember the formula. Next, a project cost 1 lakh, it generates annual inflow 25,000 for 5 years. Find approximate IRR. Okay, PV factor 10%. Okay, for 5 years, that is calculated. PV factor at 15% for 5 years is 3.352. Okay, right answer will be 14%. See here, at 10%, PV is 25,000. Okay, into 3.791, it will be 94,775. Okay, at 15%, PV is 25,000 into 3.352 is equal to 83,800. Okay, cost is greater, but still it is less than 10%. Getting it? Interpolation will be IRR 10% plus 94,775 minus 1 lakh divided by 94,775 minus 83,800. Okay, into 15% minus 10%. Okay, then 10% plus this is calculated. Okay, the 15 minus 10, then 5% will be remaining. 10% minus 2.38%. So right answer will be 12%. Right. So it should be more than 12%. Okay, it is more than 12%. Correct. Actually, it is 12.38%. So it is more than 12%. So it should come under the 12 to 13. Correct. 12 to 13 range or 12 to 13 category. Correct. But there was no option like a 13 or 12.38, right? 12 was there, but it is not exactly 12. It was 12.38. That means just little bit more than 12%. So it should come under the 12 to 13 or uske aspas, right? So 14 was there in the option. So 14 will be the correct answer. Okay. Sometimes ऐसे भी होता है, राइट? एग्जैक्टली पॉइंट वाइज आंसर तो नहीं रहेगा ऑप्शन में, but you have to correct the option which is nearly, okay, correct answer. So 14 will be the correct answer. According to Porter's diamond model, which element creates pressure for innovation within domestic firms? So we have discussed the Porter's diamond model, what is it and what is the name of that diamond model. Okay, so option A, strong domestic demand, B, governmental subsidies, C, absence of competition, and D, abundant natural resources. So if you have watched the previous session in which we have discussed the Porter's model, so you can give an answer in a comment box. Okay, whatever A, B, C, D, just give an answer in a comment box. I'll give you some time for it. All right, so option A, strong domestic demand, right? See, Porter suggests that sophisticated and demanding domestic customers pressures firms to innovate and upgrade, right? So that is the major reason why the firms are innovating and upgrading their products. Even in the product life cycle, we have seen that, okay, once your product demand increases, okay, day by day or after some time, it will decrease the demand. Clear? So you have to innovate your product, because when the recession period, sorry, not recession, the decline period is every firm is facing, right? That time the demand decreases, your product is not upgraded right now. Okay, so you should upgrade that product and you should innovate something in that, so customer increase their demand for your product. Clear? So here in the Porter's theory, what Porter is suggesting, domestic demands can influence the firm's production or firm's innovation and upgradation policies or functions, right? If the domestic demand or domestic customers, okay, demanding for a particular product more and more, then firms need to upgrade those products. Okay, this helps firms anticipate global consumer needs, giving them competitive edge in the international market. Okay, so that is how the firms can grow and firms can be competitive in the market. Clear? So strong domestic demand is the correct answer. So if you are preparing for the upcoming NTA UGC NET examination from management and commerce background, we have come up with the right preparation strategy for you, in which the experts will guide you, will give you right direction how you will crack this examination, even if you are preparing for the first time for this examination. Okay, in this complete course we are providing you the complete video lectures in which your all concepts of paper 2 will be covered. Then you will be provided with the syllabus, full syllabus notes. All the 10 units of your paper 2 will be covered in that. Okay, you can also read those notes when you are traveling or whenever you want to. If you have notebook, if you have notepad, mobile phone, tablet, laptop, wherever you can have access to those. Mock tests will be provided to you, so you will practice more and more, and then your confidence will build more. Okay, and you will be able to answer the tricky questions, moderate to hard level questions, any questions. PYQs will be provided with the right explanation of it, so you will understand the examination pattern, from which topics the more questions are coming out, and what is the exact right answer and why. All the explanation will be provided. Doubt clearing sessions will be there, in which you can ask the questions to your experts. Experts will guide you and you will prepare better. Marathon sessions also will be there. Okay, so this is complete course for your upcoming NTA UGC NET examination if you are preparing for the December attempt. Okay, what you need to do, just join the course. To join the course you have to message on this number, just WhatsApp your what we can say, just write a message on a WhatsApp number or give a missed call on a WhatsApp number. You will be guided. Okay, and start your preparation from today. You will be totally completely ready for the examination till the exam, right? Next, under mercantilism, which policy would a government most likely implement to protect its economy? Okay, to protect the gold and silver of that company, to protect the strength. Clear?
free trade agreement, import tariffs and export incentives, floating exchange rates, or factor mobility program. So obviously it is import tariffs and export incentives. Clear? See, mercantilists policy support protectionism. Protection against what? Their strength, their wealth, right? Imposing tariffs on imports to reduce foreign goods and subsidizing export to increase national wealth. So more the export will be, the more your wealth will be increasing. Clear? It assumes wealth is finite and trade surplus strengthen national power. So here in the mercantilism theory, what happens when the company or when a country, okay, to strengthen their wealth, okay, so basically country considers their wealth is gold and silver, okay, to strengthen their wealth they increase the export and reduces the import, and for that reason they can implement any policies, like a government is intervening in the global market to reduce the import and increase the export. What government is doing, they are imposing tariffs on imports, so imports will be reducing, okay, foreign goods will be coming less in the market or in the domestic market, right, and the exports will be increasing. So when the exports are increasing, obviously your wealth will be increasing, correct? So that is how the countries are what we can say, increasing their wealth. Clear? Next, in the maturity phase of product life cycle, a company is most likely to focus on innovation and research and development, face declining demand, increase cost efficiency and standardize production, or D, invest in product diversification. So right answer is option C, increase cost efficiency and standardize production. Okay, in a product life cycle, when a maturity phase is there, companies most likely to increase the cost efficiency and standardize production. Okay, so what happens in a maturity rate, maturity phase? See, as the product reaches maturity, competition intensifies, right? The price becomes a key factor. Firms focus on standardization, cost leadership and efficiency to maintain profit margin as sales growth slows. Why is mercantilism criticized in the context of global trade development? It discourages industrialization, it supports free trade, it views trade as mutual beneficial. It leads to trade wars and colonial exploitation. Okay, so mercantilism criticize. That means it leads to trade wars and colonial exploitation. Correct, because every country is focusing on what, increasing their wealth. That means securing their gold and silver. Clear? Correct. See, mercantilist policies led to aggressive export strategies and military-backed trade monopolies. Correct. This often escalated into colonialism and conflict as nations sought to control resources and market for their own gain. Okay, so strictness were followed by the countries, and that is why the trade wars were happened and colonial exploitation was also happened. Clear? Which factor would mostly likely to cause a developed countries to lose its early stage production advantage in product life cycle theory? Okay, emergence of cost efficient producers in developing countries, stronger patent laws, high domestic demand, or increased research and development investment. So that is emergence of cost efficient producers in developing countries, right? As a product matures and becomes standardized, developing countries can produce it more cheaply due to the lower labor cost. Okay, but this happens only in the maturity phase. Clear? Developed countries lose their advantage and often shift production offshore to remain competitiveness. Correct? To stay in the market, developing countries may take this kind of steps to be there in the market. Okay, to keep their product alive in that market. Which condition would contradict the assumption of Heckscher-Ohlin theory. So basically there is one option who is contradicting the assumption of Heckscher-Ohlin's theory. Which option is that? A. Uniform production technology, B. Mobile factor within countries, or immobile factors between countries, or product differentiation and brand loyalty. So right answer is immobile factors between countries, between two countries. Okay. See, Heckscher-Ohlin assumes perfect competition, correct, and homogeneous products. When branding and product differentiation dominate trade decisions as seen in the real markets, the theory's assumption break down, limiting its real world applicability. Okay. Next question. Which of the following best explains a country's persistent competitive advantage in high-end luxury brands? Labor abundance, mercantilist exports, Porter's firm strategy and rivalry, or D. Standardized production? So right answer is option C, Porter's firm strategy and rivalry. Clear? Porter's argues that the strong domestic rivalry and unique firm strategies drive innovations and global competitiveness. Correct? That is what we have seen in the Porter's theory. Correct? Countries like France or Italy maintain luxury brands dominance due to competitive pressure and strategic firm structures. Right? So these are the countries who are exporting or who are good at their products. Correct? They are having dominance in their brand, that luxury brands, and due to competitive pressure and strategic firm structure. Okay, that is the reason behind it. Understood? So that is the right answer, C, Porter's firm strategy and rivalry, which is explaining the country's persistent competitive advantage in high-end luxury brands. All right, so if you have watched the previous session, then you must be knowing this question. I have given this question as a homework for you, right? Which of the following statements best represents a critique of Maslow's theory? So right as answer was option D. It may not be considered cultural or individual differences because it may not be same always. Clear? Here is the explanation. You can take a screenshot and read the explanation, or you can watch or you can read that after the video end. Okay. Which of the following best represent a key element discovered in the Hawthorne experiments? Okay. Division of labor, financial incentives, informal work groups, or scientific time study. Okay, so this is the informal work groups. How? See, sometimes what happens, more than informal instructions, we feel more motivated, more confident with the ideas given by the PAs, okay, given by the groups, right? So we feel more motivated or more positive in that ideas. See, one major finding from the Hawthorne studies was the importance of informal work groups. Okay, who are those informal work groups? Your peers. Okay, your group solidarities, right? These groups created their own norms, influenced individual productivity, maintained team cohesion, right? See, workers valued peer approval and group solidarity more than formal instructions, as I have told you. Okay, as I told you, the people feel more positive, more motivated, okay, with the peer approvals more than the formal instructions. Clear? Mayo highlighted that informal relationships have strong impact on the work behavior, right? यू फील मोर मोटिवेटेड जब कोई आपका दोस्त जो आपके साथ काम करता है अगर आपको आइडियाज देता है तो आप और अच्छे फील करते हैं, राइट, rather than the instructions that is given by your senior or superiors, right? You will feel not that much motivated or that much of positive energy to doing work, but rather than if any one of your friend, okay, or colleague, which is your favorite colleague, has given you some of the words or some of the ideas to do work, how you can do work, right, then you will follow that thing more than the formal instructions. Clear? Managers must consider these social systems while designing work environment. Clear? So this happens with the informal workers, and that is how
the Hawthorne studies said the importance of informal work groups. Clear? Okay. What was the primary conclusion drawn from the Hawthorne studies conducted by Elton Meyer? A. Higher wages alone increase productivity. B. Physical conditions are most important factor. C. Social and psychological factors influence productivity. And D. Strict supervision leads to higher efficiency. So the right answer of this question is option C. The social and psychological factors influence productivity. Okay, I'll explain it. See, the Hawthorne study revealed that workers are motivated not just by money or working conditions, but also by psychological and social factors as well. Clear? You must be understanding this statement. Hawthorne studies is saying that some of the times or majority of times employees or the workers will not be satisfied by working conditions on money only. They can be satisfied by psychological or social factors as well. Okay, when employees feel valued, heard, and included in decisions, their productivity improves. Definitely it will give them more confidence to speak, more confident to work. Okay, they will be satisfying doing the work. Getting it? When they feel they are respected, okay, they are valued, they are heard, whatever they are saying, the ideas they are giving, that those ideas will be heard by other senior officers and all. Okay, that time they will feel more satisfied, their productivity will also improve. Clear? So Elton Mayo emphasized the role of human relationship at the workplace, right? So Elton Mayo, okay, explained about the human relationship at workplace, how human relationships are important at workplace, right? Group dynamics and sense of belonging were found to be key contributors to the performance. This gave rise to the human relations movement in the management. So this is work of HR will do this kind of initiatives or this kind of things in a company, so people get motivated not only by the money and working conditions but also by the psychological and social factors as well. Clear? That is the study is talking about. What is the Hawthorne effect as derived from the studies? A. Workers performs worse under the observation. B. Observation has no effect on workers. C. Performance drops with more supervision. And D. Workers improve performance when they know they are being observed. Okay. So right answer is option D. The Hawthorne effect is derived from the studies. Workers improve performance when they know they are being observed. Clear? See, the Hawthorne effect is tendency of people to perform better when they know they are being observed. So what it is saying, when you are observing someone who is doing work in front of you, so just say you are an HR and you're just watching your employee that they are working. You're constantly observing that person, right? But that time that employee will feel that HR is watching me. I need to do work harder or I need to do work smarter, whatever. But the HR should be impressed. Clear? In a simple word, I am telling that, right? So that is the effect. Okay, tendency of people, how the employees tendency, okay, is changing as HR is watching them, observing them, how they are working, their performance will be better. Yeah, that is the Hawthorne effect is saying. During the studies, productivity improved simply because workers felt they were receiving attention. Clear? This psychological boost influenced their motivation. Getting it? So this thing or this activity, okay, the observation activity is more motivating. Okay, this is motivating the employee to do a good work, right? Elton Moyer highlighted the importance of human emotions and perceptions in workplace behavior. The effect underscores that employees
are not machines. They respond to recognition and interest. So basically what happens when someone is observing, you feel motivated. How you feel motivated? Because if you feel that someone is observing, you feel that you are receiving attention, right? And then you will work more productive. Clear? That is the Hawthorne effect is telling you. Next question. What was the primary focus of interviewing program during the Hawthorne studies? Okay. Physical fatigue, monitoring output, understanding employee attitudes, and enforcing disciplines. Clear? So the right answer is option D, option C, understanding employee attitudes, right? All right, the interviewing program aimed to understand workers' thoughts, feelings, attitudes toward their jobs and management, right? This phase involved open-ended conversation that gave employees a voice. So they can talk about their experiences, talk about their thoughts, feelings, and attitudes, okay, towards their job and management. It revealed that emotional factors strongly influence motivation, right? Mayo concluded that communication and empathy are vital managerial skills, and this program marked a shift from treating workers as a tool to respecting them as individuals. Okay. Next question is about Alderfer's theory. Okay. What does ERG in Alderfer's theory stands for? Effort, result, and growth, existent relatedness and growth, energy, reward and goals, or earning respect gains. What does it mean about the ERG? Okay, so ERG is existence, relatedness, and growth. Okay, this Alderfer's theory condensed Maslow's 5 levels of needs into 3 core categories. One is existence. Okay, one is existence. Basic material needs like a food, water, salary, that is the existence. Relatedness, social and relationship needs. Okay, and growth, self-development and personal growth. Clear? So these are the ERG of Alderfer's theory. See, it refined Maslow's model of workplace relevance. Unlike Maslow, Alderfer allowed that these needs can exist simultaneously and in any order, right? This basically it is quite similar with the Maslow's theory of needs, but it is a refined version of that. Okay, that the Alderfer's theory is about. Clear? So remember that ERG means existent relatedness and growth. Next question. How is Alderfer's ERG theory different from Maslow's hierarchy of needs? A. Alderfer's theory has more levels. B. Alderfer's needs must be fulfilled in a fixed order. C. Alderfer allows multiple needs to be active at once. Or D. Alderfer ignores social needs. Okay, so how it is different? Alderfer allows multiple needs to be active at once. Okay, see, unlike a Masco, who proposed a strict hierarchy where one need must be fulfilled before moving to the next, right? That we have seen in the previous session as well, that, like how Maslow is said about the one thing you should first fulfill and then you need to move to the next one, right? Then only you will be more productive in time. But Alderfer is saying Alderfer allowed all in once, right? That is the flexibility that he said. Multiple needs can be active at the same time. He has given an example as well. A person can seek both salary, that means existence, and career growth, that is the growth, that means existence and growth. These are the needs, okay, and they are satisfying at a one time, at once, okay, simultaneously. This makes ERG theory more practical and adaptable to individual differences. It reflects real life behavior in workplace motivation more accurately. Okay, this is more refined version of Maslow. Next, according to the ERG theory, what happens when a higher level needs remains unfulfilled? Okay, this is a kind of challenging question from the Maslow to the next theory, right? Person ignores all needs, person gets demotivated permanently, person regresses to the fulfill a lower level need, or option D, the person continues to focus only on growth. So the right answer is option C, person regresses to fulfill a lower level needs. Clear? See how it happens. A key concept in ERG theory, first you need to understand that, is the frustration regression, which means if an individual is unable to satisfy a higher level need, okay, what is that higher level need? That is the growth. They may refocus on fulfilling a lower level needs, right? A best example I can tell you, if you cannot do a proper work, okay, if you are not understanding how you need to do or how you can complete this task, go to the basic again, learn basic things again, and then move to the advanced one. That is the kind of thing, okay, this theory is explaining. Okay, so for example, an employee denied promotion may shift focus to earning more over time. This makes ERG theory more dynamic than Maslow's. It helps managers understand employee behavior shifts. Okay, so this is the thing. Next, in the Hawthorne studies, which phase involved changing lighting levels to observe productivity changes? A. Illumination studies. B. Bank wiring test room. C. Relay assembly test room. And D. Interview program. Okay. So the right answer is option A. Illumination studies. Clear? Next. Which of the following needs in ERG theory corresponds to Maslow's esteem and self-actualization needs? Okay. Existence, relatedness, growth, or safety. Okay. I'm expecting that everyone will give the answer of this question, okay, in the comment box. Okay, I'll give you some time for that. All right. So the right answer is option C, the growth. In ERG theory, growth needs align with the upper layers of Maslow's pyramid or hierarchy. Okay, esteem and self-actualization. The Maslow's pyramid is esteem and self-actualization. That ERG theory needs to be aligned with that. Okay. They include personal development, creativity, and achieving full potential. Okay, still we have not come to the point. Now you should focus here. Employees seek challenging work, opportunities to learn, and sense of accomplishment here. Okay, so basically, kind of a person is seeking for more motivation. Okay, something new challenging to them, something new opportunities to do work, right? Alderfer believed growth needs continue to emerge even after others are met. That means you have completed one thing, but still you want something new. Still you want to challenge something. Still you want to achieve something that will motivate you better. Getting it? That the Alderfer is trying to say. Growth arrives long-term motivation and engagement. So how you will engage in your work? How you will be continuously motivated to do work? Okay, when you feel some of the challenging things, when you complete some of the challenging work, okay, the new opportunities to learn, then only you will be understanding the new things, you will be experiencing new things, you will be learning new things. Clear? So that is the thing, the growth. Okay, self-actualization needs or esteem for Maslow's theory is aligned with the growth. Clear? Which of the following are covered under TRIPS agreement? So TRIPS is basically related to your intellectual property, correct? Intellectual property protection actually. All right. So these are the options from which there are some options which are not covered under the TRIPS. Okay, that you need to eliminate and you have to answer which are the covered in the TRIPS agreement. Okay. So copyright is there, GI tag is there, investment incentives, industrial design, tariff binding. So right answer should be obviously A, B, and D because copyright, GI tag, and the industrial designs are covered in the TRIPS agreement. Okay, rest of like investment incentives are not covered because it is related to your trims, not TRIPS. And this tariff binding is related to your GAT, not TRIPS. Correct? So that is why only A, B and D are the correct answers. Understood? Moving to the next question now. Which of the following principles are common to both GATT and GATS? Right? Most favored nations, national treatment, binding commitments, subsidy restrictions, and voluntary licensing. So there are some of the principles, okay, in these five options which are common in GATT and GATS as well. Okay, so which are those? BDE, ACD, ABC, or ABE? You can give your answer in a comment box as well. Okay, I'll give you some time for it. Alright, so right answer is option A, B and C. That means most favored nation, national treatment and your binding commitments. Okay, let's have a explanation of it. Like MFN, most favored nation, national treatments and binding commitments. These three options or these three principles are existing in the both GATT and GATS. Correct. Apart from this, subsidy restrictions are primarily under SCM, not directly common in the both. Correct? And voluntary licensing related to the TRIPS. It is not related to the GATT and it is not related to the GATS as well. Correct? Understood? So that is why option A, B and C was correct. Now let's move to the next question. Which of the following is or are not part of the GATS, that means General Agreement on Trade in Services? Okay, first you need to understand the question. It is asking not the part of General Agreement on Trade in Services, right? Options are cross-border supply, national treatment, mode 5 supply, commercial presence and mode 2 supply. Now you must be wondering what is this 5 supply and 2 supply? I'll explain you after announcing the answer, right? So right answer is option C. That means only mode 5 supply. Correct? Let's have a discussion on it. So basically right answer is option C, that is mode 5 only, which is not recognized the GATS mode. Correct. Why? Because see, the mode 5 services are subject to the rules which are governing trade in goods. What is it? Trade in goods, which is not actually related to the GATS, which is focused or which is related to the service mode. Correct. So it is focusing on goods mode. Only 4 modes which is connected with the GATS. What are those 5 modes? Cross border is there, consumption abroad, commercial presence, movement of natural person, right? Along with that, national treatment is also GATS principle. Correct. Mode 2, it is also a valid GATS mode. Correct. Only mode 5 is not related to the GATS mode because it is focusing or it is governing in the trade in goods. Trade in goods. Correct. And GATS is what? GATS is related to the services. Understanding? So that is why the right answer was option C, which is not related to the GATS. Moving to the next question now, which is related to the TRIMS. Which of the following are objectives of TRIMS? Correct. A. Eliminate discriminatory investment practices. B. Promote cross-border services. C. Ensure national treatment in investment. D. Reduce local content requirements. And E. Grant exclusive copyright licenses. Okay, options are there on your screen. You can give your answer in a right comment box. All right, so right answer is option B, A, C and D. That means your eliminate discriminatory investment practices. Okay, then we have ensure national treatment in investment, and then we have D, reduce local content requirement. Correct. See, this one and this one. Okay, promote cross-border services, that means what? It is related to the GATS. And when it is asking, or when it is talking about the copyright licenses, then obviously it is related to the TRIPS, not TRIMS. Correct? TRIMS is related to the investment. Understanding? Okay. ACD, all aim at non-discriminatory investment practices under TRIMS, that we have discussed in the theory session, right? Previous session. Cross-border services, that is GATS topic, and copyright is TRIPS domain. Next question. Which of the following are binding obligations under TRIPS agreement? Okay. Patent protection for at least 20 years, then compulsory licensing conditions, then prohibition on parallel imports, then D, enforcement procedures for IP rights, and then technology transfer from developed to developing nations. Okay. Think on it critically and give me a right answer in a chat box. All right, so right answer is option C. That means A, B and D only. Okay. Okay, so ABD clearly outlines the mandatory TRIPS provisions. Okay. The C option, which is saying prohibition for parallel imports, it is actually permitted. Okay, it is actually promoted to do. Correct. It is not prohibited. So option in the question is asking about the prohibition, but that is not correct. It is permitted, not prohibited. Then option E we have, okay, tech transfer is encouraged. Actually it is not legally binding. It is actually you can do. Understanding? It is encouraged that you can transfer technology with it, but there is no legally binding with the both countries. Understanding? So this, that is why it is also not correct option, and C also not correct option. Only ABD is correct option, which is totally related to the TRIPS provisions. Next question. Which of the following agreements emerged directly from the Uruguay round of trade negotiations? TRIPS, TRIMS, GATT 1994, or GATS or NAFTA? Options are there on your screen. ABDE, ACDE, BCDE, or ABCD. Okay, so all options are having one common, that is D. Correct? In option A, B, C, D, D is there. Understanding? All right. So option D is correct. A, B, C, D. All right. A, B, C, and D. TRIPS, TRIMS, GATT, and GATS all emerged from the Uruguay round. That is foundation of WTO in 1995. Right? NAFTA, a regional agreement including US, Canada, Mexico, which is not related to the WTO. NAFTA is a different agreement. All right. Okay, I'll give you homework for NAFTA. Okay. Okay, just put a comment in a comment box. What is the full form of NAFTA? All right, which is related to the North America. Already I have given you the hint. Now you have to complete the all answer. Right? Give in the comment box. TRIPS agreement is administered by which international organization? UNCTAD, WTO, IMF, or WIPO? Okay, so it is related to WTO. Obviously we are already studying about the WTO agreements. Correct? So in the WTO agreements we have a TRIPS, TRIMS, GATT, GATS, AOA, as well as, right? So all right, so WTO, okay, the agreements of WTO, we have TRIPS in it. Okay, TRIPS is a agreement of WTO, which is totally related to the IPR, that means intellectual property right. Then we have UNCTAD, which is totally not related to the WTO. Okay, and it is not related to the TRIPS as well. It is not related to the IPR as well.
Understanding promotes trade and development but does not administer trips. IMF, which is totally connected with the monetary terms. Okay, there is nothing to do with the IPR. WIPO deals with IPR globally, but actually not the trips, right? It is not connected to the trips, and trips is directly connecting with the WTO. Understanding? TRIPS is the actually agreement of WTO. So right answer is WTO, not UNCTAD, IMF, WIP, nothing. Next, TRIMS agreement prohibits which of the following investment measures? Export subsidies, performance requirements like local content mandates, import duties, or patents restrictions. It is related to the performance requirements like local content mandates. Okay. TRIMS restricts policies like local content requirements and trade balancing measures that distort the trade. Okay, we have completed this point in the theory session. Export subsidies fall under SCM, subsidies and countervailing measures, not TRIMS. Then import duties are part of tariff policies, not investment measures. Then patent issues fall under TRIPS, not in TRIMS. Right? So that is why these are the correct answer, these are the wrong answer. You have an explanation of it. Correct? Next, which agreement ensures protection of copyright, trademark and patent in international trade? There is direct answer. It is TRIPS. Okay. GATT is related to the tariffs and goods. Okay. Barriers and tariffs. GATT is related to the services. Okay. It is related to the goods. It is related to the services. Right. And TRIMS is related to the investment. And this TRIPS is related to the IPR. That is intellectual property rights. Clear? TRIPS sets the minimum standards for IPR protection, patent, copyright, GI, वगैरह वगैरह, globally, right? GATT is trade in goods, GATS trade in services, and TRIMS investment related measures. Clear? Next, under GATS, mode 4 of supply refers to cross-border supply, consumption abroad, commercial presence, presence of natural persons. Just we have discussed in the previous questions, right? So the right answer is only D, that is presence of natural persons. It is asking about the cats. Okay, remember, every time the answers are not that difficult. It may be deep but not difficult. Correct? It is totally easy. What is important? You need to understand the question first. Clear?
Which of the following qualifies as a foreign direct investment? So four options we have, and one of them or two of them or three of them or maybe all of them are points which are covering or which are stating that this is the FDI. Okay. A foreign company acquiring 15% equity in an Indian company. B, purchase of Indian government bonds by foreign institutions. C, investment in Indian stock market through mutual funds. And D, establishing a new manufacturing plant in India by foreign firms. Options are like only A and D, only B and C, only ABC, or all of the above. So the right answer is option A, that is A and D only correct. Okay, when you have 15% equity in Indian company and establishing a new manufacturing plant in India by foreign firms, right? So these are the two types of FDIs that we have already seen in the theory session, right? See, FDI actually involves at least 10% equity should be there in Indian companies to call it as a FDI. That is important. Then option A qualifies as a FDI because the foreign firms acquire 15% equity. Correct. Minimum criteria is 10%, and it is the in the option we have seen this, it is 15%. Right. So obviously it is there. It is called as a FDI, right? Option D qualifies because establishing plant is direct investment, right? And B and C are passive investment. These are not FDI, but it is called FPI, right? But the question was asking the options which are qualifying as a FDI. So only A and D is qualifying as a FDI. Correct. because one is having 15% investment and second is actually establishing a manufacturing plant. Correct? Next, which of the following statement is or are true about FPI and FDI as well? FDI is a long-term investment. FPI is a more volatile than FDI. FDI brings in managerial control. FPI involves active control of business. Okay. Options are AB, ABC, BCD, or all of the above. So right answer is option B, that is ABC. A, B, and C. Okay. FDI is a long-term investment. That is correct. FPI is more volatile than FDI. That is also correct. FDI brings in managerial control. Correct. Okay. FPI involves active control of a business. No. That can be happened in FDI when you are establishing a manufacturing plant over there. Correct. See, FDI is intended for long term, right? Presence and often includes management control or participation. In contrast, FPI is a quick and out, quick in and out. Okay, once you have invested for short term, you have what we can say, withdraw all the money, that is done. That is called FDI. Okay, quick in and quick out, and hence more volatile. That is why it is called volatile, because it's not for a long term, it is for short term. Once you have investment for some time, you will withdraw your all money with the profit. Correct? That is happening in the FPI. FPI does not allow investor and any say in how the company is run. So D is incorrect. Okay, so basically FPI is not like that thing where you have a business in another company, or sorry, another country, and you're having a manufacturing hub or anything. Okay, it's not like that. It is happening only in a long term period, that is from FDI. Okay, that the source is FDI, but FPI is just an investment where you can invest in another company in another country. Okay, that is only FPI. Next, which of the following are benefits of FDI for the host country? Right? Employment generation, technology transfer, sudden capital outflow, improvement in foreign exchange reserves, and skill enhancement. Right? Right answer is option A, A, B, D, E. Right? C is not there. C. FDI can help the host country by generating jobs, bringing new technology, strengthening foreign exchange reserves, right? These all points we have already discussed in the theory sessions. If you are new to this channel, please subscribe the channel and just go to the description box. You will find a link over there. Okay, click on that link and watch the previous videos as well, because it is very important that you should clear your concept. Okay, obviously through the MCQs we'll cover it, but the more and more points will be covered in the theory session only. So watch that video as well, so you will be covering the whole topic. Correct? Next, it also leads to training and skill enhancement for local workers. However, sudden capital outflow is more associated with FPI, not FDI. Correct? Next, which of the following sectors in India attract the highest FDI inflow as per recent trends? Right? Service sector, telecom, retail trading, computer software and hardware, and education. See, this question is most important. Make it most important. Okay, this question. So right answer of this question is option C, only A and D. Right? Service sector, computer software and hardware. These are the sectors in India attracts the highest FDI inflow. Right? In recent years, India has received maximum FDI in service sectors like finance services, consultancy, and IT software industries as well. Right? While telecom, retail do attract FDI, they are not top contributors. Actually, where it is services, whether it is IT softwares, whether it is telecom, retail, okay, all are coming in India as through the FDI. But services and IT, like IT is also a service sector, right? These are the industries which are coming maximum in India, okay, as compared to telecom and retail as well. Correct. Education has FDI limits and receives less investment comparatively. So basically, education has its limits. That much of education facilities or services only available, okay, to come in India. Uh, Along with that, sorry, apart from that, okay, or exceeding that limit is not available or not allowed in India actually. Correct. Next, which of the following are routes through which FDI can be brought into India? Automatic route, government approval route, hybrid route, strategic route, or brownfield investment. Correct. Right answer is option B, that is ABE. Right, hybrid route, strategic route is not considered. India allows FDI via automatic route, no prior approval. Correct. And government route needs approval, that we have discussed, okay, in the theory session. Brownfield investment is a type of FDI, right, which is referring buying or expanding existing assets and in common in FDI mode. Correct. Brownfield, that means you are acquiring the existing company or existing business. That is your type of FDI, brownfield, right? We have already covered all the types like horizontal, then we have vertical, right? We have brownfield, right? We have then what is it? And some of the types of FDI we have already discussed in the theory session. Okay, all the FDI types we have discussed, right? Greenfield is also there. Okay, so go and watch that videos as well. Hybrid and strategic routes are not recognized official categories. Okay, next, which of the following statements differentiate FDI from FPI? This is very important. Okay, this is also we should make it as a important. FDI leads to capital information, FPI does not. FDI is illiquid, FPI is liquid. FDI is speculative, FPI is strategic. FDI includes physical assets creation, FPI does not. Okay, so the right answer is option A, ABD. Correct. See, FDI creates productive assets like factories or offices, improving capital infrastructure. Right here, you can see, right? It is not easily liquidated, unlike FPI, which is highly tradable and hence more liquid. Correct. FPI is speculative, so C is incorrect. Speculative. Here it is saying FDI is speculative. No, FPI is speculative. Okay. Next. Which of the following may be negative impact of FDI on a host country? A. Repatriation of profits, monopoly or market domination, technology transfer, cultural erosion, or exploitation of natural resources. So the right answer is option A, B, D, E. Apart from C, all are correct, we can say. Okay, C is not correct, but all are correct. While FDI has many benefits, there are some challenges too. Okay, like profit repatriation, reducing forex, dominance of foreign firms, hurting domestic industries, and exploitation of culture or resources. Right? Sometimes FDI are coming in India or coming in the other country. Okay, FDI is possible in every country. Correct. So they may exploit the cultural or resources, the natural resources, or that if that country, a particular country where FDI is coming, in that country the natural resources are maximum, those can be exploited. Correct, in terms of raw material, understanding. So it is challenging too. Technology transfer is actually a benefit, not a negative. The question is asking about the negative impact. Okay, so these are negative impacts. Correct. Technology transfer, how it is negative? It should be positive, right? Next, Which of the following qualify as FPI? Now FPI. The same question was asked, the first question about FDI. Now it is asking about FPI. Foreign investor buying shares on Indian stock exchange. Foreign investor buying debentures of an Indian economy. Foreign entity acquiring 12% equity in an Indian firm. Foreign mutual fund investing in Indian bonds. Foreign company buying real estate for personal use in India. Okay, so right answer is option A, that means A, B and D only. Okay, C is not correct, A is also not correct. Okay, FPI includes financial instruments like shares, debentures, bonds that don't provide management control, right? So here you can invest like in another country, you can share, you can invest in shares, you can invest in debentures, you can invest in bonds as well. This is called FPI investment. Okay, C, that means 12% qualifies as FDI because it exceeds the 10% threshold. Correct? Here in the question, the 12% was asked in the C option. That is why we selected as a incorrect answer for that. E is neither FDI not nor FPI. Real estate for personal use is not categorized under either. Correct. See the question. Foreign company buying real estate for personal use in India. Here, two things, one thing is important for personal use. It's not for business, it's not for investment, right? So it should not be considered as a FDI and FPI as well. Next, which of the following are features of FDI and not FPI, right? This is kind of a confusing question. Okay, if it is the features of FDI, why they have asked not FPI? Why they have written here, over here that it is not FDI's features? Okay, they could have said like which of the following are features of FDI only. Okay, and then full stop, nothing else. But to confuse you, okay, this kind of question can be asked. Which of the following are features of FDI and not FPI? And they will give you some kind of options related to the FPI. But you need to understand the question first, right? So what we need to do in this question, we need to find out the features of FDI only and we need to ignore the FPI. Correct. Bring in entrepreneurial skills, subject to sectoral caps in India, cannot be withdrawn easily, associated with long-term relationship, bring in volatile capital flows. The right answer is option A, B, C, D. A, B, C and D. E is not correct. Okay, this is related to the FPI, not FDI. Okay, see, FDI is a long-term commitment, so in that reason we bring it technologies and expertise as well and skills as well. In subject to caps in certain sensitive sectors. Okay, it is a subject to caps in certain sensitive sectors. E is not correct. FPI brings the volatile flows, not the FDI. Correct? So this is all about this question. Next question. Which of the following regulatory bodies in India oversees FDI and FPI, okay, respectively? RBI, SEBI, Ministry of Finance, Department of Promotion of Industry and Internal Trade, DPIIT, or NITI Aayog. Okay, so right answer is option B, A and D for FDI, B for FPI. A and D for FDI, okay, and B, SEBI for FPI. Okay, ठीक है. FDI is monitored by RBI, okay, under FEMA and DPIIT for policy and approval route. FPI being a market-based financial investment is regulated by SEBI. NITI Aayog is a think tank and does not regulate actually the investment, whether it is FPI, whether it is FDI. Okay. The question is asking about the balance of payment definition. That means the correct option which defining the balance of payment. A record of income and expenditure of the government. B, a systematic record of all transactions, all economic transactions between resident of country and the rest of the world. Right? C, a record of only trade in goods. And D, a statement of foreign exchange reserves. So when we talk about the balance of payment, it is not limited thing, limited to the one government, limited to the only trade in goods, or limited to a foreign exchange reserves. It is limited to the, it's not limited to the, okay, it is the transactions between the residents of a country and the rest of the world. Correct? So that is why option B is the exactly correct answer. A, C, and D, these are the limited transactions. See, BOP is comprehensive record of all economic transactions like goods, services, income, transfers, investments between residents of a country and the rest of the world in a given period. Correct? That is called your exact BOP. It includes current and capital account. We have already discussed the current account and capital account in the theory session, right? If you have not watched the theory session, go to the description box. I have provided the link of the lectures, previous lectures. Watch those videos as well. In terms of other options, ACD are too narrow or maybe unrelated, right? In the theory session as well, we have discussed how BOP is calculated. So the things which are necessary to calculate, okay, the factors which are included in the calculation of BOP, we have discussed. Clear? So current account, capital account, finance account, reserves, are all the things, how reserves are calculated, right? And what is the connection of a reserves with the BOP, that you will understand in the theory session. Next, which of the following are components of current account of a BOP, right? Merchandise, export and imports, services, which is invisible, then unilateral transfers, remittances, and foreign direct investment, which is called FDI. Okay, we have already discussed FDI as well. So right answer is option ABC. Okay, see, FDI is a part of capital account, not the current account. Current account, that means the transactions of goods, services, income, unilateral transfers, right? These are considered in the current account, not in capital account. Capital account में क्या करेंगे? FDI, right? Next, a country is said to have BOP surplus when imports exceed exports, total capital inflows exceed outflows, forex reserves decline, or there is a deficit in the current account. So when total capital inflows exceed outflows, then we will call it as a surplus, BOP surplus. Understanding? When income, that means your inflow, okay, these both are more than outflow, okay, then we'll call it is a BOP surplus. Clear? और इसका उल्टा कर दो, when outflow is maximum, okay, when outflow is maximum or outflow is exceeding the inflow, that time we call it deficit. Okay, BOP deficit, right? BOP surplus means the country has more money flowing in than flowing out, usually through net capital inflows, right? A and D indicates deficit, not surplus, and C implies forex reserves are falling, all right? A sign of a stress, not surplus, not exactly defining the surplus. Okay, next, which of the following transactions are included in the capital account of BOP? FDI, FPI, ECBs, foreign aid, imports of goods. Right answer is option B, that means A, B, C, not D. Okay. See, the capital account covers FDI, FPI, external borrowings, NRI deposits, and foreign aids. Okay, imports of goods are a part of current account, right? So only A, B, C are correct here. See, I think here current account में क्या include होता है? Goods, right? And this is the question which is asking about the exact the thing, imports of goods. No, it is not considered in the capital account. It is considered in the current account. Okay. Next, what does a persistent BOP deficit indicates about an economy? Strong foreign investment inflow, currency is under depreciation pressure, high export competitiveness, possible decline in forex reserves. Right answer is B and D. Okay, when currency is under depreciation pressure, one of the reason to indicate the deficit. Okay, and possible decline in forex reserves. Right, these are very important things to indicate the deficit. All right, a persistent BOP deficit suggests that the demand for foreign currency is higher, leading to depreciation of a domestic currency, possibly draining the forex reserves. Correct. A and C are incorrect. They would improve BOP, not worsen it. Correct. Like strong foreign investment inflow, obviously it will increase the BOP. Then we have high export competitiveness. Export competitiveness is more, then obviously inflow will increase, right? When inflow is increasing, how we call it deficit? It is a surplus. Correct. It leads to the surplus, not exactly we call it surplus. Which of the following statements are true about the relationship between BOP and exchange rate? Very important. Okay, very important question. A, BOP surplus leads to appreciation of a domestic currency. B, a BOP deficit may lead to devaluation or depreciation. C, exchange rate movements can affect trade balance. And D, BOP and exchange rates are unrelated. Options are there: A and B only, A, B, C, B and D only, or all of the above. So right answer is option A, B, C only. BOP and exchange rates are unrelated, right? These are related, it's not unrelated. Okay, see, BOP and exchange rates are closely connected. There is a big connection of these both. Okay, when exchange rates or currency appreciation depreciation is happening, it will directly affect to the BOP. A surplus strengthens a domestic currency while a deficit weakens it. Correct. Also, weaker currency makes export cheaper, improving trade balance. Right. And D is the false. See, these things we have discussed in the theory session, right? How the exports will be cheaper in a particular country. Okay, and why? What is the reason behind it? Getting it? How the factors of production will be also cheaper, and what is the exact effect of the of those lower labor or lower factors of production? Okay, that all things we have discussed. Correct. Next, which of the following are invisible items in the BOP? Software services exports, remittances from abroad, tourism income, machinery exports. Right is ABC. Okay. Invisible refers to non-physical flows like services. Right, invisible means services and visible means the goods. Okay, A and C and B also. D, the machinery exports is a visible item, obviously it is a good, right? It is a kind of goods, and goods are visible, right? And the question is about invisible, correct? That is why the machinery exports are not considered in that, correct? Invisible form a major part of India's current account income, not the capital. In India, which institution compiles and publishes BOP data? Ministry of Finance, RBI, SEBI, NITI Aayog. Right answer is option B, RBI. Okay, RBI is the responsible body to publishing the BOP data. Reserve Bank of India, RBI, is the sole authority responsible for compiling and publishing India's BOP data on a quarterly and annual basis as well. Okay, Ministry of Finance, SEBI are involved in the policy and regulations but not in publishing. Next, which of the following entries would be recorded as a debit in BOP? Import of goods, foreign tourist spending in India, Indian company repaying foreign loans, Indian remittances to relative abroad. Right answer is option A. That means A, C, and D. Okay, debit entries represent outflows of foreign exchange, such as imports, loan repayment, remittances sent abroad. Okay, B is a credit entry because it brings the forex into it. It is an inflow, that is why. Okay, the BOP identity states that current account plus capital account is equal to 0. BOP always balances in accounting terms. Capital account surplus offsets current account deficit, or trade surplus leads to currency depreciation. Right answer is option B, B and C. Okay, see, BOP always balances in accounting identity. Okay, that is totally correct. Due to changes in the reserves or capital flows. A capital account surplus can offset a current account deficit. Okay, that is also this one, B and C. Is a misleading A option. Okay, option A is a misleading. They don't always sum to 0, and D is wrong. Okay, a trade surplus strengthens the currency. Trade surplus leads to currency depreciation. This is not correct. Okay, it actually strengthens the currency. Yeah, that is why the correct option was only B and C, not A and D. Clear? All right, so thank you so much everyone for attending this session. See you in the next session. Bye bye, have a great day.